Hey everyone, how's it going? Can I just get a heads up if you guys can hear me? Perfect. Um, so, yeah, I believe everything should be good. So, welcome to um, this week's episode of the Weekly Bias. It's currently pretty late here, so I'm gonna be a bit quiet, little soft. Okay, let me just fix that real quick. Um, hmm. It says my audio should be 100%. I think it's just because um, I'm talking a bit softer, but just bear with me. I'll bring the mic in a little bit closer. Hopefully that should be a bit better. But yeah. So let's get started without further ado. Um, Last week we covered the dollar index, and before this candle developed, I did say that we were going to have the features of a up close candle for the next week. Um, Open, low, high, close. So that's your textbook bullish candle right there. Um, I did say we would push up into this weekly bearish order block. Um, and we did pretty handsomely. We actually overshot the body a little bit, which admittedly was a bit higher than I expected, but this thing, when the dollar's ripping, it is most certainly ripping. So, in terms of this week's trading, most of my levels are on the daily chart, but I'll just go over this one from the weekly. We have consequent encouragement, or 50% of this particular wick right here is a liquidity pool that I'm looking at. Um, and yeah, that's pretty much it. Then I have, oh yeah, from the weekly we have this um, sell side inefficiency, buy side imbalance that was made in last week's trading, as we did not fully enclose the gap between this candle's high and this candle's low. So only sell side was off. Oops, let me just rename that. It's actually a buy side imbalance, sell side inefficiency. Sorry about that. Yeah, it's a bit late. I'm a bit disorganized with my charts today, but let's get into. Someone said they can't hear anything. Can you guys hear me? Um, Someone just give me a confirmation that I'm not talking to myself here. Okay, perfect. I'm not sure why you can't hear me. Bavalicium. Sorry if I mispronounced that name, but it seems the other people can hear me, so I'll try and speak a bit louder. But yeah, just try reconnect. So on the daily, in terms of this next weekly candle we've currently got right now, this is for all of the coins that we go over this week. I'm recording this currently on Monday, and the New York trading session opens in 45 minutes, so we haven't really had the bulk of Monday's trading yet. So don't take this this weekly candle right here with a grain of salt, because it most certainly can end up a lot different. But it's it's probably all going to be dependent on CPI. That's what the majority of the traders are waiting for. The market's just lying in anticipation of the number tomorrow, and we didn't really have many signs of like a trending Monday, which is common before a news event of this size. It usually saves all the fuel for saves all the fuel for CPI. We have a question there. Um, how many times do you trade a day? Okay, so last year I used to trade a lot more than what I've been trading this year, because the market's not really been favorable, especially crypto, which we'll go cover a bit later in the stream. But in terms of the trading day, um, the ICT kill zones are dependent on the sessions. So whether you're trading traditional markets like the S&P 500 or currencies like EURUSD, even crypto, the algorithms that the markets run on are time dependent very heavily. So the three sessions within the trading day are Asia, London, and New York. And within those um, trading sessions, there's specific times of the day called the kill zones, where the algorithm is most likely to offer you a high probability trade, and it's just those are the days, those are the times where I'll look for a trade. So just to reference, you want to have your trading view chart in UTC -5 for New York time, which is what the algorithm runs on. Um, and then you'll be able to like reference your charts to, as I say, um, for trading hours, the London Open kill zone goes from 2 a.m. EST to 5 a.m. So I'll usually look for a trade around there. I don't really, even though I am in Australia and Asia is at one of the best times of the day, I don't really focus on trading it because often it's consolidation that leads to a move in the rest of the day. But yeah, so focus on London Open kill zone, which is between 2 and 5 a.m. EST, and then the New York kill zone. So for Forex, that's between 7 and 10 a.m. EST for New York Open, and then we have for indices and what I use for crypto, it's more from 8:30 to 11:30 because leading into the lunch hour, I don't really like to be holding my trades. And if I'm not trading, if I haven't traded within the AM session, I'm probably not going to be trading for the day because unfortunately in Australia, the PM session is like crazy. As you can see, the AM session hasn't even begun for the equities market open at 9:30 EST and it's already 11:48 PM here. So the PM session, 3 to 4 PM is a very good time to take a trade because the final hour macro comes on and you're almost guaranteed a setup. But I'm rarely trading then because with uni and everything, it's hard to trade those sessions of the day. So I focus on London and New York Open. Um, you reckon I could start with like 1K and try to make a couple hundred a day or not possible? So that's a hard question. It just depends on your risk tolerance, how much you're willing to be risking in the market, and whatever return you're expecting. Whether you're trying to trade scalping on the 1 minute, the 5 minute, the 15 minute, whether you're trying to trade holding a position, buying in the morning, selling in the evening, trying to hold for the entire session. Um, Obviously, it's not realistic to have the expectation of making a couple $100 a day, especially based off only a starting balance of $1,000. But it definitely is possible. It just depends on how you take your trades, how you manage your risk. So if you haven't already, I would highly recommend checking out our YouTube channel. This risk management video that my co-founder made, I uploaded it yesterday, and it's a very good watch on how to manage your risk and control your your losses. So just quickly, moving on with Dixie, I am expecting higher prices, but it is dependent on the CPI number. As you can see, the daily buys for today on a normal day would 100% be long, reaching up into this buy side liquidity pool from the previous week high, as we have gravitated quite far away from this weekly buy side imbalance, sell side inefficiency here. And if we do get a CPI number that is bullish for risk off, which is dollar up and foreign currencies down, equities down, then I am expecting first buy side liquidity to be tagged here, and then we can move up into consequent encouragement of the weekly wick that I outlined before, and into this daily bearish order block. If it is really bullish for dollar, then we can possibly see this being the drawn liquidity, this daily volume imbalance, and this buy side liquidity pool that rests above the high that led to the move that took this key low over here and tapped into the monthly FVG where we said there was going to be a reversal. So yeah, if I was purely basing it on the chart, um, I would be expecting higher currency, higher dollar. Um, let's see, what do we have here? Do you consider the lower wick of a candle when marking an order block? Okay, so there's a lot of misinterpretations about what an order block actually is, and let me just clarify that over here for you. So, for example, if I was taking this, um, supply and demand and all that teaches you the last up close candle before the move that led to the low, when that's not the ICT definition of a bearish order block. It would be the consecutive candles, the consecutive green close candles that led to liquidity being taken and a fair value gap being made and the low being taken. There's your high probability bearish order block. But in terms of what levels I take for an order block, um, I'll use this candle right here. Um, so the four levels that you have of a candle are the same thing for an order block. You've got the low, which is for a bearish order block, the highest probability to be traded into. But unless the conditions are really bearish, I don't really expect much of a reversal off the low of the candle. I'm more interested in the body, as in the open and the close. But before we get to the close, we have the open. So we have the low, we have the open, and then 50% of the body, 50% of the entire candle, my bad, is this level here, just using the Fibonacci tool. That's called mean threshold, which is 50% of an order block, and the open and mean threshold are the most likely to be traded into for valid ICT bearish order block. Um, and if you're bearish, you don't really anticipate prices over mean threshold. It's unlikely that you get it trading or especially closing any significant time frame above mean threshold. And then the lowest probability areas of a bearish order block to get traded into are the close, and the highs rarely get touched unless your narrative is wrong, your bias is wrong, and the candle's going to get traded through. What is the name of your strategy? Is it fair value gap strategy? Yeah, so the name of my strategy is Smart Money Concepts slash ICT. The Inner Circle Trader is my mentor, um, who we learned from and whose concepts we use. He's coined them to be called smart money concepts, and a lot of people have run away with run away with it and sold off their own courses and whatever without giving him credit. But yeah, that's the name of the strategy. So quickly touching on dollar again. We are in the bearish order block, but we did trade above the close. So this is suggesting to me that we may want to trade higher. We do have the on the weekly, we do have this weekly buy side imbalance, sell side inefficiency, or fair value gap that is being created by this candle. So on Monday's trading, there is one, but we could see a move down if CPI comes in bullish for risk on, and then fully fulfill this. But as of right now, we could see a trade lower into here, as it's currently a balanced price range. As you can see, the overlapping FEG. So sell side was offered here, buy side offered here. Um, but yeah, totally dependent on CPI this week. So now that that's dollar covered, am expecting higher prices on dollar, at least up into this liquidity pool, and then 50% of this candle over here. All CPI dependent once again. So the next one I wanted to cover is EURUSD, as last time I covered GBP in last week's episode. So we handsomely traded into the top of this sell side inefficiency, buy side imbalance, or fair value gap over here, and saw swift rejection. Market structure shifted once the low that led to the high getting the last push up, the high getting swept here before the reversal with the fair value gap. Market structure shift over here, so we can be expecting lower prices on the daily for all foreign currencies. As we know, this lines up with the inverse correlation to the dollar. Um, so on the weekly, last week's trading was pretty heavy to the sell side, more than I thought, actually. I didn't expect it to go this low, but it ended up selling off into the close of the week with this candle on Friday. I was actually expecting it to reach higher up before, and then we were going to get some nice sells this week. But in terms of euro dollar, we have a big fat GBP SMT showing a lot of strength on the dollar. Um, on the dollar, sorry, on the euro compared to the pound. Currently, we're sitting just under consequent encroachment of this buy side imbalance, sell side inefficiency, and the daily candle right now is creating a fair value gap. So, if CPI comes in bullish for the dollar and bearish for foreign currencies and risk on assets, we could see a spike up into this order block, filling this gap over here, and then trade lower. So if we were to trade lower through the bottom end of this fair value gap, I'd be looking at this small one over here. However, if CPI comes in lower, I expect us to trade a lot lower and into the opening price of the daily order block. Um, this spike up here was not able to fill this entire um, fair value gap. As ICT said, that's an indication of it wanting to go a lot lower, as well as this wick not trading up to consequent encouragement or 50% of this wick, and that's the algorithm tipping its hand to us that it does want to go lower. However, we have taken the sell side within this that we created from this bounce last week and sold out into the Friday. Friday's low has been taken out, so I'd watch out for that. But um, as of right now, we're kind of hanging on a thin edge here. If we do trade lower on the weekly time frame and we don't respect this daily order block, I'd look at 50% of this week for the next level, as we don't really have any inefficiencies or imbalances in here. But yeah, we have left a massive fair value gap here. It just depends on how the CPI goes, whether they want to come up and trade into it first and then go down, or whether we just see a move to the downside. But yeah, that should be euro covered. Next I'll go over BTC. Sorry, I was a bit late to start drawing up my charts, so it's not fully done, but just bear with me. We have this big fat SMT on the weekly that we've been talking about for the past, I don't even know how many streams. BTC showing a lot of relative strength on the high time frames relative to its correlated pair, ETH. We traded handsomely up into 50% of this bearish order block on the weekly. Sorry about that. Couldn't close above. Swept the previous week high. SFP'd under, and then we saw this very nice candle to the downside. As we were expecting lower prices on ETH, BTC delivered just to the T. And then if I go down to the daily, let me just get that there. If we go down to the daily, we had market structure shifting bearish here. We have a bearish order block right here at the low of this weekly bearish order block. We have this. I'll mark that pink. We have this fair value gap right here that we traded slightly into and created a swing high with a lower high to the left of it, lower high to the right of it. That's in terms of market structure, that's how you define a swing high. Um, and almost fully filled this previous daily fair value gap on this side and traded into the breaker. Low, high, lower low, higher high. There's your pattern for a breaker. So on BTC, you guys know that crypto is not really my preferred trading asset right now whatsoever. The market's not been delivering anywhere near as cleanly or as algorithmically, I'd say, as Forex has been and index futures. Um, but BTC on the weekly CPI dependent, we have created with this weekly candle right now, how it looks on Monday's trading, we have created a big fair value gap here. So I believe we could see them send it higher, reach for this buy side liquidity, and then price eventually trade lower. I don't really believe that this holds in terms of sending it like back up to take out this 25k high, but that's mainly because of the ETH chart, as well as a special one that I want to look at one after this. But I'll just quickly run over ETH. We covered it in last week's stream, so not the most detailed chart, but we had this swing high from the FTX crash taken out, and we did not take out this high here, which is why we have a smart money technique, smart money tool divergence between the two assets. ETH is showing a lot of weakness, which, as you can see, it sold off quite a bit more. Um, to the downside on ETH, I see this daily buy side imbalance, sell side inefficiency, and this daily buy side imbalance, sell side inefficiency, which is also confluent inside this daily breaker. Bullish order block, bearish order block. Got a rejection off there, and then now you guys might be wondering what these Fibonacci levels are. So the Judas swing, which was the move up that led to this high getting taken out, all of the buy stops above there got cleared, and then we ran lower, shifting market structure with a fair value gap. Cleared out all of these lows as we very clearly outlined in the last week's weekly bias. Um, if you measure this from the bodies of the highest body close to the lowest body close there, this is through -3 standard deviations, and this is -4.5 standard deviations of this range. As you can see, that's where the Fibonacci is anchored to. Um, so that's another tool that we use for projections, especially for the Judas swing move. It can be great for adding confluence to your zones. So that's another reason why I do believe Ethereum trades lower. We may see a move up first and then trade lower, but as of right now, there's nothing to suggest that Ethereum is bullish on the daily. The weekly structure did shift bullish once we took out this high, so I do not expect just a straight dump to take out these equal lows and take out these relative equal lows and then back to June low from last year. But we can expect some lower prices, in my opinion. Obviously, if CPI comes in massively green, then that's going to be another story, and we'll see some upside. But I do believe the top is in for now. Even if we see a move back up into here, I'd be happy to swing short above zero point 0.5, so in a premium, um, up to the 705, which is optimal trade entry. So yeah, any questions, guys? I'll just pull up the other chart I wanted to look at, USDT dominance. I'm not sure when these drawings are from, but yeah, so USDTD is a very interesting chart right now. Um, let's see, how far did this? Sorry, I'm doing some on-the-spot technical analysis. Okay, we did not make it to CE of this wick, which indicates to me that this is quite bullish. Um, the September 12th. Yeah, so this is another smart money technique divergence. This September high here was traded through on Bitcoin, and its inversely correlated asset USDT dominance did not trade through the low that was put in at that same time frame, indicating that this is bullish accumulation of USDT, and we can expect higher prices. So on the weekly, this was a nice candle we had last week, and we've left, based on Monday's trading, a small weekly fair value gap right here. And then on the weekly, the next logical draw on liquidity is this. Buy side liquidity pool. Um, technically structure has shifted bearish, but we can expect a significant retracement into this um, fair value gap over here. I'd be looking at, oh, sorry about, oh, what? I'd be looking at the 0.5 level of this wick, or 7.82%. I'll just quickly jump down to the daily. Yeah, this was a nice sell-off. I caught it on a paper trade I gave you guys in the Discord. But anyways, yeah, so the next logical draw on liquidity for USDT dominance is obviously above this swing high, where all the buy stops are resting. Um, we can expect that to get taken out, which lines up with Dixie analysis for purely looking at the chart and not let's see. Sorry, I had a question. How do you know what level to draw the SMT on ETH compared to BTC? Okay, I'll cover that. Um, okay, so on Bitcoin, so for smart money tool, you want to be looking at um, the wicks of the highs, whether it's a body wick or a high wick, it doesn't matter, but you want to look at the high that was put in on a certain date. So 13th of September 2022. BTC put in this high before it traded lower, and it hasn't taken that out yet until this pump. Traded through this high and traded through this high. If I quickly switch over to the Ethereum chart, yeah. Oh no, let's just get rid of this. Um, you can see that this November 22nd high matches up to this November 22nd high on Bitcoin. So both of them have been taken out. As we mentioned, ETH took out this level right here. However, the one that I was referring to of the 11th of September, um, this is just representing that it's showing relative weakness because if they're correlated markets, um, this should have taken out the same high that Bitcoin did. But as you can see, there's a divergence in the correlated assets. Kraken correlation is what ICT calls it. Um, so that's representing that smart money is accumulating short positions on Ethereum relative to BTC, and BTC is showing a lot of relative strength when compared to its correlated asset of ETH. Yeah, this big fair value gap here. So I don't want to keep it too long. How long have we been going for? 35 minutes. Yeah. So basically, I did mention on Twitter that I was going to be covering an altcoin. So I'll leave it up to the viewers. Would anybody like to recommend an altcoin that I give a weekly bias analysis on? Feel free to drop a comment in the chat, and I'll chart one of them for you live from scratch. Sol, that was the first one I saw. Sol USDT. Let's see. Quick little plug here. Let's just say we called the very Sol bottom in the Discord. The guys in the Discord know. Capital K, I'm not sure where he is. I told him that I was waiting for this 3-day order block to load up on Solana when we were down here. We gave the dollar cost average zone to be the entire monthly fair value gap, and off the low of this 3-day order block, let's see how much return my spot bags got. It was to the high, it was a 226% return. Can we just get some appreciation for that in the chat? But let me just quickly run over Sol. Sol, we traded pretty aggressively to the upside, shifting market structure. And I thought it was printing a market maker sell model, but when BTC and ETH chopped for like 2 straight weeks, it kind of like fucked it off. But I'll just go in on the daily right now. We had first drive, second drive, third drive taking out the high, and you can expect that to be the top. Then we look for signs of reversal, nothing here, nothing really here. And then we get this displacement, this quick aggressive move to the downside, taking out the low that led to the high, which means market structure has now shifted bearish on Sol. Um, Yesterday, we quite handsomely traded up all the way into the bottom of this bearish order block over here, completely or almost completely filling in this daily FVG, and then we quickly sold off to the downside in today's trading. So therefore, in alignment with what I see on ETH, Sol's pretty correlated as well. So I do believe we see lower prices. In terms of the dealing range that we've just made from this low to this swing high over here, this above 50% is premium, below 50% is discount. We're still in a high time frame premium, so it's not really the place to be looking to buy. I do expect a move into, so our first discount array is going to be this buy side imbalance, sell side inefficiency over here. So I'll just move that off. I do believe that this would be the logical draw on liquidity for Sol over the next few weeks. CPI dependent, because if it comes in crazy bullish for risk, these highs should get cleared and we should reach that target for my OG spot call. But um, yeah, this should be the logical draw on liquidity for Solana over the next week if we do get what I'm expecting. The weekly shows no indication of wanting to go up and take out these highs. The most I can see us trading on the weekly is into this that we're making on this trade on this candle after we sold off pretty heavy today, um, which would, let's see, 50% of this is that level, and 50% of this wick is basically the same level. Um, is anybody seeing this, or am I the only person who's seeing this? Can you honestly look at that and tell me that buying and selling made the market do that? Buyers and sellers moved the market enough so that this lined up exactly how it does. Can anybody tell me that with a straight face? This is algorithmic just like they all are. But people seem to struggle to accept that fact. But yeah, so in terms of Sol, expecting lower prices, nothing. The daily structure is so bearish. There's literally nothing in here that you can expect. We might see a little reaction from this double fair value gap over here, and then trade back up, and then trade lower. But ultimately on the weekly, I do believe we come back down, at least at that 50% level, and then we can look for some discount raise. But yeah, um, that's pretty much it for this week's episode of the Weekly Bias. Um, I hope you guys enjoyed. Oh, okay, yep. I see that. Let me just go over. This was crazy. I remember it happened like a few years ago, but do you guys see this? Let's drop some game right now. Let's drop some game right now. Binance's BTC US dollar pair, um, back in 2021 October, when BTC was trading. I'll jump down to the daily. When BTC was trading at, do you guys remember? Do you remember how these were the days of waking up every single day and you just open Binance, open your spot and just see BTC up 24%. I mean, all the odds would be ripping, everything would be up. Um, in a 1 minute candle, it wicked from $62,000 to 8,225. Let me just show you that. Yeah, 8,200. So, a little thing about wicks. The algorithm treats it like a gap. So basically 50% is the level that we're looking for. Guess what got you the exact bottom of the bodies for the entire bear market rally, all the way from 36, 34 to 48. 50% of this wick. So that's why a lot of people are saying that BTC is going to 8K because this wick is programmed to be filled. But if you look at what happened, that was just the crazy one from before. But look at what happened Monday last week. In a 1 minute candle, I was showing this to my brother. In a 1 minute candle, BTC wicked down from 22,766 to 17,000 in 1 minute. In 1 minute of trading, it wicked all the way down to there. Last week. So if you had stink bids just sitting here, you got filled and you were able to be in profit. Or imagine you, imagine you're long, you caught this entire move up, and you feel confident enough to trail your stop loss here, trail your stop loss anywhere in here. You're wrecked. You're wrecked just like that. Um, but yeah, let's see. We've got this on live on YouTube. Let's see if we get a reaction off this 50% level. 19,893. Mark it out in your charts. It got pretty much the bottom of this bear market rally. So let's see if we make our way down here. Um, I'd be interested to see what the price does right here. So yeah, little bonus at the end. But I'll just quickly do the shameless plug. Make sure you guys follow our subscribe to our YouTube channel. I'm going to be uploading another beginner education video on how to use TradingView, um, and we'll keep populating the channel with the VODs of the live streams, beginner education, all of that. Also on Twitter, you want to follow us. At TheLinesman TA. We've now made our Discord private, so if you go to the pinned tweet and click on um, this link right here, it takes you into the waiting list form. So it's just a few questions that we ask, and if you answer that, you'll be able to be on the waiting list, and we'll get back to you as soon as possible. So that's the only way of getting into the Discord, which is the only way of getting whitelist for our very own NFT project. Very important, Panthers. Um, I don't know about you, but I think the spanner art's pretty sick. The art's pretty sick as well. I'll just show you guys real quick. For those of you who aren't in the Discord, I sneak peeked a very, very, very nice one of one um, King BTC Panther. So if that looks as good to you as it does me for a potential profile picture, you want to be on that whitelist. But anyways, cheers guys. Thanks for watching. And catch you next